Vance, good to have you back on. Listen, a lot of concerns about COVID and variants, this one, the next one, travel, maybe shutting back down. You heard the Facebook news, but that is not scaring you off airline stocks. Why not?
Well, good morning to you, Brian. It's good to see you again. They don't scare us all at all. You've seen sort of a tick up in COVID, which is concerning, but you've also seen the airlines tick down with COVID almost in tandem. And we think this is going to end. If we can get a little bit of relief from the COVID, uptick that we're seeing, we think that JETS, JETS, which is the ETF that we like that owns a bushel of these high airline stocks, that's going to make a good move up, maybe a 5, 10, 15% pop. If we can get a little bit of relief from COVID, we think that's what's holding down sectors such as the airlines.
And does that go for real estate as well, particularly not housing, but I'm talking about commercial real estate investment trust, REITs?
They're looking better and better. I like the residential real estate looks better to us than the commercial real estate. We talk to more and more businesses throughout the course of the week, and they're just not all that interested in renting space right now, but that doesn't mean there's not going to be a tick up in commercial real estate, because there probably will be over time. But this variant is putting some pressure on that. But I think it's a pretty solid buy here if you're looking long term. I see the market, Brian, being up 5 to 10% before the end of the year. Our proprietary indicator, the HCM byline's positive. That's a non-emotional indicator. That gives us a good trend that the market's moving higher. And if you'll recall, Brian, and when the last time you and I spoke, I said we would hit about 4,400 on the S&P by midsummer. We hit that target. Really pleased with that. We're bullish going into the last 2 quarters of the year. Very bullish, actually.
You're not worried about renewed lockdowns, economic downturns, delayed. You heard Contessa talk about delayed returns to the office. That is not shying you away from stocks. Why not?
Not at all, because we're mathematically driven. HCM byline is a mathematical indicator which keeps us in the market. It keeps us sane. It keeps us from making emotional guessing game decisions. And that's been such an effective tool for us. So that's why we're not worried about it. As long as the HCM byline, our proprietary indicator, is positive, we'll stay long this market. Any pullback we see as a buying opportunity. And we've been buying on every pullback that we've had, even though they've been quite shallow.
Yeah, and some of the hottest stocks in the market have been technology stocks, but they've been semiconductor stocks, in particular, NVIDIA, microchip technology, those types of names. That is, as I understand it, another group that you like, despite the fact they've had a pretty sizable run the last couple of weeks.
Well, they have. They kind of broke out of that 90-day base. We were watching that on the semiconductors. They broke out. We think they're going to continue to move higher. I think, again, I go back to our thesis over here is the last 2 quarters we think are going to pick up a lot of steam. And a lot of things have been held back, as you well know, Brian, because of the fear of the COVID. And hopefully we can get a tick backwards in that, and it'll start going in the direction we want it to go, which is, the opposite of up. And we'll see some of these stocks and these indexes start to make a move to the other side, which will be a dramatic move to the upside once COVID. It starts to get a little relief from, I think, a psychological effect of what's taking place in the tick up in COVID.